Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zach Meir with the Bulletin Board Heroes on Wednesday, the 5th of February. Starting off with Analyst Energy, which is the star of the day, I suppose, given the percentage rise that we've seen so far. In fact, we pushed through the 0.3 level. That beat the old 0.29 peak from May. What we would expect now is probably a consolidation between here and 0.2. That was former resistance in June. So while we're above 0.2, looking for a best case scenario target up to that March resistance line projection up to 0.43. Positive points note, of course, are the gap higher yesterday through the 50 and 200-day moving averages, now starting to rise at 0.15, so that suggests that we're in the run-up to a golden cross buy signal. And also the way that that gap came after a narrow bear trap from below the old October floor, so that just managed to kick out the last of the weak hands in the stock before the move higher here. 0.3 looks to be a level given the way that I think the warrants issued to the new management kick in at that level, so they've got every reason for the stock to be at that level or obviously much higher. Next situation is a stock which I don't think I've looked at before, but hopefully will be a name for the future. Arkle Resources. Here you can see that we've had a gap higher yesterday, a bit like Andalas gap higher yesterday through the 50-day moving average, and held up very well. A good strong candle today. If we can hold it or clear the old resistance from back in November at 1.7 pence on an end-of-day close, looking for a best-case scenario target here up to 2.5 pence at an August resistance line projection. This is at the top of the broadening triangle that we have here on the daily chart. Best stop loss at the moment, probably the 50-day line at 1.23. Obviously expect a little bit of jiggery pokery either side of 1.5 as consolidation of the initial move that we've seen, even if the shares head higher after that. Stock which has been called higher on several occasions and has never quite managed to sustain itself is Bacanora Lithium, but given the fundamentals and the state of the EV market, etc., it could be that this particular stock finally has its days in the sun. We saw a 50-day moving average cross below the rising 200-day line in the end of November, which was the first sign that something positive might be happening. Now we've got the 50 and 200-day lines both rising, so the next time they cross should be a golden cross. As we know, the strongest part of the technical cycle is the run-up to a 50-day, 200-day golden cross, so that's where we are at the moment. And share price breaking this resistance line from last month and the 50-day moving average at 33 pence. We hold above that today, and for the end of the week, then the target here up to 45 pence, and hopefully much more. I mean, that's really just assuming the shares would remain in the recent erratic range that we've had, like I said, 25 to 45 pence. So hopefully, if there is a sea change in opinion, the shares will do rather better than that. And another stock which has not behaved itself particularly well in the recent past, but is looking to make up for its sins, is Echo Energy. Here we see the break of this falling wedge. The line there from September running through, just under 2.2 pence. So we need an end-of-day close above that today. Ideally, an end-of-day close sometime this week above the 50-day line at 2.37 as confirmation that the shares can turn around. Then after that, obviously we are looking for a 3 pence plus target, which would take the shares back to retest October resistance. On to another one which has been a bit of a laggard, but may finally be coming good. A lot of people are rather frustrated by EVR holdings, but here we see it's broken the falling wedge from November. The line in question at 4.5 pence above that. We are in a sort of recovery mode, let's say. Also a bear trap rebound that we've had versus the old October low at 4.3 pence for February. So plenty there to hang on to as far as the bull argument is concerned, or the recovery argument. Above 4.5, looking for 6 pence. And stop loss, I suppose, just below that 4.4 pence level. Should do it. We should hope that the shares head up directly from here. Continuing with the theme of stocks which people have been frustrated by is Harvest Minerals. Doesn't look like much at the moment, but we do have a narrow bear trap below the we had a narrow bear trap for the end of January below the initial support at 3.42p, so that's plus point number one. Gap higher today makes an island reversal, which is a positive as well. And I suppose we were also broken a line of resistance from the middle of last month, if I can draw it properly, around the around the gap floor level at 3.7 pence. End of day close above 3.7 should be the first sign that we are able to at least go back to the 4.5, 4.8 area, which is where the 200-day moving average is. Stop loss back below the gap floor at 3.5 or below that, and really looking for a slow recovery here, accompanied by the bullish divergence in the RSI window, where we had the lower price action but higher RSI there. So some signs of early bird opportunity there for Harvest Minerals. Finishing off the day with Ilika, and here I suppose the most straightforward of the stocks today. We've got this rising trend channel from the beginning of November, broken that January resistance line at 40 pence, and really while we're above the support line there of the channel at 37 pence, looking for further gains. They could be up towards the top of the channel at 60 pence over the next few weeks, and ideally we remain well above 40 ahead of that kind of move. Double bounce for the RSI at the neutral 50 level is normally a leading indicator on potential move higher, and that's what we've had over the last few weeks at Ilika. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.